Here are 10 overnight swing trading rules you need to know. Check out number 7. It's important. It may seem obvious, but you need to have a plan. Not so much getting into the trades, but getting out. You need to think about all of the scenarios. What are you going to do if the morning doesn't go your direction? What if it opens the opposite way? What if it moves in your favor but has room to grow? What if it moves in your favor but starts to retreat immediately? Think about what you would do. Have a plan. What is your tolerance? Where will you place your stops? When will you get out? Think that through. Practice these strategies on paper or through various programs, but make sure you're prepared. Like day traders, swing traders need to understand what they are trading. That may be a specific stock, an ETF, or a style of trading, which could include any stock or ETF, but you're looking for a specific setup. Now, for overnight swing trading, the way we do it, we use specific indicators. So we know what we're going to do, so we tend to focus on specific ETFs like the SPY, the QQQ, and the IWM. Get to know your stock or ETF intimately. Know how it trades, the price action during high volume, low volume, during high volatility and low volatility, during certain economic reports, and of course, earnings season. These are things you need to understand so you can be a better trader. Next, understand your position sizes. What's your risk tolerance? How much can you handle losing without going into a Great Depression or feeling bad about yourself? Look, there's a lot of emotion, ups and downs, and we want to do our best to control the emotions as much as possible. Position sizing can help us do that, especially when you're trying out a new system. So work small. Some people work with 1% of their capital. Some people work with 10%, some 20%. It all depends on the type of strategy you're using and, as I mentioned, your risk tolerance. And speaking of risk tolerance, you need to understand what is your bottom line, your biggest loss you're willing to take. When will you get out of a trade? This is important because I know we always feel like, okay, it's going to get down to a certain level and I'm going to get out and it's going to bounce right back up. It very may well. But guess what? It could also keep going down or the opposite direction of your trade. So set the rule in place and stick to it. You'll be better off for it in the long run. Hey, what was your biggest trading mistake? Put it in the comments below. One important thing you can do is cap your account. In other words, have a specific amount for this style of trading. And you're only going to use a percentage of it each time, but that gives you extra capital so you can continue at about the same level during the ups and downs. But as you're adding more to that account, take that money and put it in a different account. Invest it elsewhere. That way, you'll avoid taking big risks that could end up losing everything. Seriously, it's okay to have multiple accounts. I have one for trading only, which I keep only a certain amount of money in. And then I have another one for my retirement, which I mostly invest in good companies. And then a third one for emergencies. Be consistent with your indicators. Know the indicator you're using to buy for your overnight swing trade and know when that indicator may fail. There are certain situations, maybe certain volatilities or volume or news. There's all different reasons why a specific indicator isn't as good as it is during other times. So understand that. So that means you can use multiple indicators, but be consistent in understanding which ones you're using all the time. Don't keep switching them around. The same with selling. Having indicators that you use to sell. It could be as simple as moving averages or maybe money flow. You can find the indicator that works best for you, but once again, be consistent. However, there's nothing wrong, and I encourage you to continue to test other indicators because it's quite possible that your current indicator over time may not be as effective. And if that's the case, you want another indicator to go to. So if your current indicator is not doing the job anymore, stop using it. And that includes the SPY Tomorrow indicator. Use the indicators that are providing you more opportunity. I believe this is one of the most important rules for swing traders. Don't let the market run your life. I know it's not easy, but don't keep checking in on the market like it's Facebook, TikTok, or Instagram. There's nothing you can do about it. Let it go. And it can drive you crazy. Look, the after-hours market does not always represent how the market will open the next day. I get up at 5:30 each day. That's 4 hours before the market opens. And I've often seen the market going against my trade when I get up and perfectly fine by the time the market opens. And if I watched the market moment by moment, that would have been 4 hours of absolute suffering. So don't do that. Let it go. You're trading to have a better life, not to let it run your life. One of the most important rules, don't let emotion get to you. It is the downfall of even the best traders. Now that's why we like overnight swing trading, because really we take a lot of the emotion out of it during our time frame, unlike day traders who are navigating the ups and downs throughout the day. However, emotion does come into play when we have to sell in the morning, so we need to learn to keep it in check. You might want to try meditation. Look for a trading partner that you can trust, not to tell you what to do, but to use as a support system. Now, you can review each other's trades afterwards and look for new strategies, look for new ideas, and even new indicators that can help you both. The next rule is to let your mistakes go. Some of my biggest losses have come from trying to fix little mistakes. Don't miss future videos. Subscribe.